Preparing for a claim settlements interview? You've reached Candy Mentor, and this video is for you. We'll walk through 15 key questions you're likely to face. For each question, you'll see a sample answer, followed by the key points to cover. Subscribe, like, and share, and drop a topic request in the comments. Question 1. What is claims settlement, and why is it important in insurance operations? Claims settlement is the process of validating a loss, confirming policy coverage, quantifying the payable amount, and closing the claim through payment, denial, or compromise. I see it as the moment an insurer delivers on its promise. A good settlement is fair to the policyholder, defensible under the policy wording, compliant with regulation, and financially controlled. Poor settlements damage trust, inflate loss costs, and can distort reserves and profitability. While answering, focus on the full settlement life cycle, the insurer's contractual obligation, customer trust, cost control, regulatory timelines, and the link between accurate settlements, reserves, loss ratios, and profitability. Question 2. Walk me through the end-to-end claims settlement process. I would start with first notice of loss, where the claim is logged and basic facts are captured. Then the adjuster reviews policy coverage, requests evidence, investigates cause and liability, and estimates the loss. Once the payable amount is agreed, the claim moves through authority approval, payment setup, and accounting entry. Finally, the file is closed with clear documentation, recovery actions, and any reserve adjustment reflected in the claim system. Make sure to cover notification, registration, document collection, coverage verification, liability assessment, loss valuation, approvals, payment processing, communication with the insured, closure, and controls such as authority limits and audit trails. Question 3. How do you distinguish coverage, liability, and quantum in a claim? I separate the analysis into coverage, liability, and quantum. Coverage asks whether the event falls within the policy terms and whether any exclusion applies. Liability asks whether the insured or a third party is legally or contractually responsible for the loss. Quantum is the amount payable, supported by invoices, repair estimates, medical bills, or valuation reports. A claim can fail at any stage, so I document each conclusion before recommending settlement. In your answer, distinguish the 3 decision layers: whether the policy responds, who is responsible for the loss, and how much is payable after deductibles, limits, exclusions, and evidence-based valuation. Question 4. What is a claims reserve, and how does it change during settlement? A reserve is the insurer's best estimate of the future cost of a claim. At notification, the reserve may be based on claim type, policy limit, or early evidence. As investigation progresses, I update it for medical reports, repair estimates, legal advice, salvage, or recovery potential. Accurate reserving matters because claims reserves feed the balance sheet, loss ratio, capital assessment, and pricing decisions. Late reserve strengthening can surprise finance and management. Be sure to mention case reserves, incurred but not reported claims, reserve adequacy, movements as new information arrives, and why settlement teams must communicate changes quickly to actuarial, finance, and management reporting teams. Question 5. What documents would you typically request before settling a claim? The documents depend on the claim type, but the principle is the same: prove the event, prove coverage, and prove the amount. For property damage, I would expect photos, repair estimates, invoices, ownership proof, and sometimes a survey report. For health or personal accident claims, medical records and bills are critical. I also validate identity, bank details, and policy status. If documents conflict, I pause settlement and investigate before payment. While answering, focus on evidence quality, policy-specific document requirements, proof of loss, identity and bank validation, invoices, police or medical reports, and how missing or inconsistent documents affect settlement timing. Question 6. How would you calculate the final settlement amount on a claim? I calculate settlement from the gross validated loss, not simply from the amount claimed. For example, if a repair estimate is $100,000, the policy limit is $80,000, the deductible is $5,000, and depreciation is $10,000, the payable amount becomes $65,000 before any recoveries or tax treatment. I would document each adjustment and explain it clearly. Transparency reduces disputes and helps the file stand up to audit or complaint review. Make sure to cover gross assessed loss, policy limits, deductibles, depreciation, coinsurance, exclusions, taxes, prior payments, salvage or subrogation, and the need to show transparent calculation to the claimant. Question 7. What red flags would make you suspect a potentially fraudulent claim? Fraud red flags rarely prove fraud alone, but they justify deeper review. I watch for late notification without reason, inconsistent statements, altered invoices, inflated repair costs, losses occurring soon after policy inception, repeated claims, or pressure for urgent payment. My approach is controlled. Preserve evidence, compare data, request clarification, and escalate to the SIU or fraud team if thresholds are met. I stay factual with the claimant and avoid making accusations prematurely. In your answer, talk about behavioral, documentary, timing, and pattern-based red flags, plus escalation procedures, fraud team involvement, fair treatment obligations, and avoiding unsupported accusations during claimant communication. Question 8. How would you handle a claimant who disputes the settlement offer? When a claimant disputes settlement, I first separate emotion from the technical issue. I reread the policy wording, review the evidence, and check whether our calculation or coverage position is defensible. Then I explain the decision in plain language, showing the clauses and numbers used. If new evidence is provided, I reassess. If disagreement remains, I follow the complaint route, consider negotiation, and involve legal or senior claim support when needed. Be sure to mention reviewing policy wording, rechecking facts, explaining rationale, using negotiation or mediation where appropriate, maintaining claim notes, following complaint procedures, and involving legal counsel for complex disputes. Question 9. What is the difference between a standard settlement and an ex gratia payment? A standard settlement is paid because the claim is covered under the policy. An ex gratia payment is discretionary. The insurer pays even though strict policy liability may be absent or uncertain. I would only support it with proper approval, clear documentation, and a defined rationale, such as customer fairness, ambiguous wording, or commercial relationship value. The risk is creating precedent or weakening policy discipline, so governance and wording of the settlement letter matter. While answering, focus on contractual entitlement versus discretionary payment, governance approval, customer relationship considerations, precedent risk, reserving treatment, and documenting why an ex gratia settlement was commercially justified. Question 10. How do subrogation and salvage affect claim settlement? Subrogation and salvage reduce the insurer's ultimate loss after settlement. Subrogation means the insurer pursues a responsible third party after paying the insured, such as recovering from another driver's insurer. Salvage is value recovered from damaged property, like selling a written-off vehicle. I consider these early because they affect reserves, net claims cost, and recovery strategy. However, the insured's rights and policy terms must be respected before recovery action starts. Make sure to cover recoverable amounts from third parties, salvage value, net loss reduction, timing of recovery recognition, claimant rights, documentation, and coordination between claims, legal, finance, and recovery teams. Question 11. How do you manage settlement timelines and regulatory service standards? Timely settlement is both a customer promise and a compliance requirement. I track claims against internal SLAs and regulatory deadlines, but I also monitor why a claim is pending, documents, investigation, legal review, or claimant response. If delay is unavoidable, I communicate clearly and record the reason. Aging claims are risky because they increase complaints, reserve uncertainty, and potential penalties. A disciplined diary system keeps ownership visible and prevents silent backlog. In your answer, talk about service-level agreements, statutory deadlines, fair claims handling, communication cadence, pending requirements, interest or penalties for delay, and how workflow queues help control aging claims. Question 12. How would you communicate with an upset claimant during the settlement process? I handle upset claimants by acknowledging the impact first, then moving into facts and next steps. For example, I might say, "I understand this loss has disrupted you. Let me explain what we need to settle it." I avoid defensive language and never promise payment before coverage is confirmed. I summarize open items, give a realistic timeline, and document the call. Good communication often prevents a technical claim from becoming a complaint. Be sure to mention empathy, active listening, confirming facts, avoiding admissions beyond authority, explaining next steps, setting realistic timelines, documenting the conversation, and escalating urgent hardship or complaint situations appropriately. Question 13. Why are settlement authority limits and internal controls important? Settlement authority limits ensure the right level of review before money leaves the insurer. A junior handler may approve small claims, while larger or unusual settlements require senior, technical, or committee approval. I also expect segregation between assessment and payment release, bank validation, and system audit trails. These controls reduce fraud, error, and leakage. They also protect staff, because a well-documented approval path shows the settlement was reasonable and authorized. While answering, focus on segregation of duties, settlement authority levels, maker-checker review, fraud prevention, payment validation, audit trails, exception approvals, and why controls protect both the insurer and policyholder. Question 14. What accounting entries or financial impacts are linked to claim settlement? From an accounting view, a claim generally creates an expense and a liability when the insurer has an obligation and the amount can be estimated. When the claim is paid, the liability is reduced and cash or the payment clearing account is credited. If there is reinsurance, part of the loss may create a recoverable asset. Claims teams must code settlements correctly by policy, loss type, and period, so finance can reconcile and report accurately. Make sure to cover claim expense recognition, claim reserve or outstanding claims liability, payment clearing, recoveries, reinsurance receivables where applicable, and reconciliation between claim systems and the general ledger. Question 15. If you had a high volume of pending claims near month-end, how would you prioritize settlement work? In a high-volume period, I would triage rather than process randomly. First, I prioritize regulatory deadlines, vulnerable customers, large-value claims, and files ready for payment. Second, I separate claims needing investigation, legal input, or missing documents, then assign clear next actions. I would update reserves for material movements before month-end, and keep managers informed on aging and blockers. The goal is to protect customers, compliance, and financial reporting at the same time. In your answer, talk about triage by urgency, regulatory deadlines, financial materiality, customer hardship, fraud or litigation risk, reserve updates, team coordination, and transparent status reporting to managers. If you are still with us, congratulations. You are much ahead of the rest and serious about preparing for your interview. We hope we were able to add value to your preparation and create some helpful content. Do not forget to like and share this video. Your small act can do great things for us.